side. Fifthly, it is about making adjusting entries. Adjusting entries are made to adjust the revenue and expenses account to make them match with the actual period in which they happen. It is because the company implements the accrual basis, so we need to make it more specific as to whether the nominal we gathered reflects the actual nominal based on the period for which it's recognized. After we record the adjusting entries, we need to put this into ledger again. Hence, we will get an adjusted balance afterwards. 6. We prepare adjusted trial balance. As I've explained before, all entries we make must be transferred into ledger. The ledger then will show all balances for each account affected by adjusting entries. It is stated as adjusted trial balance that include all accounts balance after adjusting entry. 7 steps in accounting cycle refers to preparing financial statement. After such lengthy processes, we will produce the accounting cycle's final output, which will be the financial statements. Financial statements are used to inform the company's financial conditions for stakeholders in order to make business decision making. Financial statements includes income statement, statement of changes in equity, financial position statement, statement of cash flow, and note to financial statement. And now, we are in the 8 steps in accounting cycle. It is preparing closing entries. This step requires to close all the company's nominal account, also known as revenue and expenses account. Not only that, we also need to close the company's dividend. It means that all the account that related to income statement will have a zero balance at the end of accounting period and at the beginning of next period. It is because all the account have been closed so that only real account like assets, liabilities, and equities have balance at the beginning of next period. Our 9th step is trial balance after closing, and we usually call this as post-closing trial balance. We all know that we have an adjusted trial balance before this, and that is a list of all accounts which are assets, liabilities, equity, revenue, and expenses which obviously have been adjusted. But don't forget that we have closed revenue and expenses account. Thus, we need to renew the list after closing in ledger that finally will affect balance of each ledger. The balances are represented in post-closing trial balance, which will have zero balance for revenue and expenses account. The last step is preparing reversing entries. We need to know that this step is optional for the company to take. But if we're curious about what's exactly reversing entries, then here it is. The reversing entries is the reverse record of several accounts which have been adjusted. The several accounts that is meant are only for accrued revenue and expenses.
Created using Powtoon.